Hey everyone, happy Friday. I am super excited to have Ross Gerber on today for our Facebook Live. I know a lot of us have been looking forward to having him on. He is the president and CEO of Gerber Kawasaki. Ross, thanks so much for coming on today. We appreciate it.
Yeah, thanks for having me. I'm excited to be here.
You're not new to the world of dentistry. Your dad is a dentist and he's still practicing.
Not only that, I work with a lot of dentists. So, I probably, as a financial advisor, know more about helping dentists than probably anybody in this business because I grew up in it. And, I actually helped run my dad's office right out of college, which, I was like, actually it worked out really well because this was when computers were kind of a new thing. And I was like, Dad, you should put in computers and change billing. And he was like, son, you're crazy. And I said, trust me, in a month, you'll thank me. And we did this and we increased his recouping his billing. In the old days, you'd like send somebody a bill and they would never pay you. Right. And I was like, Dad, that is not the way to do it. Like take their credit card at the desk, make them pay right up front, stop waiting 90 to 300 days to get paid, and it made a huge difference to his business right away, So we implemented technology. My dad became very foresightful with technology in medicine, and it adds enormous efficiencies as well.
When I founded this group about 3 years ago, the goal was to, have the goal of being able to retire financially independent, have that goal by maybe the age of 55, maybe even sooner, who knows? And I think that's the beauty of finance is that if you start early, you can achieve that kind of goal. There are plenty of dentists in the group that have become financially independent by the age of 45. I mean, it's remarkable.
Well, it's all when you start. It's kind of exactly what you said. It's absolutely when you start. I think there's this misperception that people get rich quick, and our society fuels that misperception through the media. And so you see, let's say, a famous person who was a waiter at El Pollo Loco and then gets a job as an actor and then gets a big role and is now making $20 million a year. And you're like, wow, get rich quick. That's sort of like the American viewpoint, but really it's get rich slow. And that's really how most Americans have built an enormous amount of wealth. It's generationally, really. It's really hard to do it even in one generation. But I started saving and investing as a child. So my parents taught me when I was 13, my grandfather, to invest my money. Okay, this is the big difference. Okay, a lot of people teach their kids how to save money and they put it in the bank. That's not the lesson. The lesson is teaching your kids to invest their money and not put it in the bank. Putting your money in the bank is really very similar to just burning it. So the way inflation works, that if you keep money in a bank, you're essentially burning 2 to 4% of your money every year. And so It's like, in the old days, banks paid interest rates. See, the way we look at the world now is banks will never pay interest rates again. Okay. Why should they? Okay. In fact, many banks are charging people for deposits today. Okay. And we think we're going to see this more, even in the United States. So you want to have something safe today. I get clients that go, I want something safe, like guaranteed. I go, okay, that's negative 0.1% yield. That's what it is right now. If I try to buy you a 6-month bond in the safest company I can find, it's a negative yield in this country. It's never happened in history. So the banks don't pay interest. In the old days, they paid a little bit of interest above inflation. So if you keep your money in the bank, you are literally burning your money. So you have to invest it.
What's going through your mind? For the last few months, you're looking at the markets, they keep on going up. Obviously some of these technology disruptors are up over 100%. Some of these are up 300% in the last
we own them.
4, 5, 6 months.
So
what happened?
So COVID wasn't a secret. I mean, the Chinese were dealing with this months before us, and we knew it actually. And I did a couple podcasts warning investors about it. I, like most, had no idea, how severe it would become in the United States because it was easily preventable, And now in hindsight, they did know in the government, and it was easily preventable, and they just chose not to do anything. So COVID was a preventable disaster. But besides that, the market actually went down the exact amount that earnings went down. It's unbelievably predictive. The stock market is not a lagging indicator. It is a leading indicator. People who try to predict the stock market are wasting their time, okay? You cannot, if it's a leading indicator and I can't predict the future, then I should be watching the stock market for what the future brings, not trying to predict where it's going to go. Okay. Mm-hmm. So when the market went down 35%, it was pretty clear what was going to happen. Earnings are going to go down 35%. That's exactly what's happened. Now the market's completely rebound. So what's the market saying? It's either two things. Okay. Earnings are going to come right back and they're going to be perfectly fine. That's what the market's saying. In fact, many companies are doing way better, way better because of COVID. What nobody wants to say is COVID is a gold mine for technology. It's a gold mine for efficiency. It's wonderful for businesses across America. It's horrible for labor. It's horrible for bricks and mortar. It's horrible for the old economy, but it's wonderful for everybody else. So no money was actually disappeared.
I mean, I think right now, for the most part, you know, for our dental practices, there's a lot of demand. I mean, a lot of patients have come back. They want to spend the money. They want to get their treatment done.
Right.
But the scary part is that what is it going to look like a few months out?
So the great thing about being a dentist is like you can't not see the dentist, right? It's like when your teeth hurt, you have no choice, number one. And number two, it affects the way people perceive you. So if your teeth look bad, it affects people's perception of you. It just does. So people will spend on cosmetic care and dental care. I'm not that concerned for the dentist. What I'm concerned for is the dentist that doesn't adapt the technology. Okay. Yep. How are you marketing as a dentist? Okay. How are you getting clients? What is your workflow? How efficient is your business? Are you using CRM? Are you using social media? Are you putting up videos? Do you have a YouTube channel? Okay. Yeah. Dentists don't think this way. And a lot of them are older. But if you're a young dental firm, you could kill it right now. Kill it right now. You know, because you're in a job nobody's going to quit.
And you know, since we're talking about dentistry, talk about $500,000 in loans. That's becoming the norm. That's becoming the average right now with kids getting out of dental school. I've been out of dental school for 10 years now. And I remember, I think the average we used to talk about was $250.
Do you still have student loan debt?
I don't, luckily.
Did you pay them off?
I paid them off, but there are a lot of people that are relying on that student loan forgiveness. You know, they're saying, I'm going to make the bare minimum payment. And after 20 years, the government's going to forgive the loan. So I don't know if that's going to happen.
So I don't think anybody should go into healthcare unless they absolutely love people, okay? Because the days of being a doctor and being wealthy because you're a doctor are over, okay? Why? Because we've let big corporations take over healthcare and not entrepreneurs who actually provide great services and can charge more. I kind of believe in concierge medicine. Like, I think that's the future if you want to make money. So if you want to make money as a dentist, you serve a high-end clientele and you go to their house. That's the future, okay? You and your hygienist, you create a mobile dentistry and you go to people's houses and you're high-end or their mansions and you do their teeth cleanings and whatever. You'll make a fortune.
You gave a ton of good information here. I mean, from, you know, sector by sector, industry by industry. So that's...
Yeah, it's been a long one. So hopefully people stay awake through the whole movie here.
Absolutely. No, I appreciate it. I know you got to get going here. So it's been about 90 minutes. So I'll let you go here, but thanks so much for coming on. You've got to follow Ross
at Gerber Kawasaki.
Yep. Easy to follow. There are a lot of good tweets out there from him. So there's never a dull moment.
Yeah. And reach out if you have financial questions.
Yeah. How can they get hold of you?
I mean, the easiest is just to send me an email, ross@gerberkawasaki.com. Go to our website. You can always click on our website, gerberkawasaki.com, and send a message through there. We have 25 great advisors here. We're all over the nation, but I think this is a very hard thing to do. And between that and running your dental practice, and let us help you do this, and you'll find that it's really worth the cost to have a financial advisor. It really is, and I think most dentists do understand that. So
absolutely,
we're here to help, and
part of the reason you should have one is because if you try to make all the decisions on your own, your judgment is so clouded that your
emotions,
just think whatever you're thinking is the right way of doing things, and no one's telling you it might be wrong.
It's also, we're all emotionally driven people. This is where most investors fail. It's not actually they have bad ideas or the wrong stock. They actually own the right stock, but they sell it at the wrong time and they buy it at the wrong time because they're emotionally driven, and they don't understand that you have to divorce yourself from that. And that is incredibly difficult to do. And that's where the advisor steps in, exactly what you're saying. Oh, I thought it'd be a good idea to buy Apple. And we say, listen, it's not the idea that's wrong. It's the timing that's wrong. Okay. Apple's trading at this huge valuation. I know it's going up. I know you love the company, but this isn't the time, you know? Okay. That makes sense. You know, so that's where the advisor comes in. It's like bouncing ideas, you know. On the other hand, we love home builders right now. I think there's a tremendous opportunity to build homes, and it's a huge lack of supply, you know? So we would explain that. And then an investor would say, oh, I can buy something at 12 times earnings with growth, or 40 times earnings with no growth. You know.
Exactly.
All right. I'll let you go.